Hello everyone and welcome back to my stock channel. Today we're going to take a quick look at the Dow Jones Industrial Average activity for Friday. And we have a slight down day so far. Down a bunch from yesterday. We're looking at 700 point loss yesterday. 311,000 was the payroll numbers today. Still came in hot. Not as hot as January, so that was a good thing. That allowed the market to calm down for a minute. Is it inevitably going to mean the Fed's going to raise 0.5? Probably a lot more likely. Depends on Tuesday's inflation report. We have a couple more issues that are of equal or greater importance to where this is going. Number one, today we look like we're entering a little banking crisis. Regional banks are down 15% on the day. They've already had to halt trading multiple times. SVB is the new problem child. It'll be problem child number 3 of the week. You got Signature, Silvergate, and now SVB. I don't think their problems are related to crypto. They said they didn't have any exposure to crypto. We got some problems though. All of the regional banks have been reporting earnings that are coming in way below the other companies in their division. They're losing money. They're losing about 6 to 10% on the latest earnings report. That translates into people not paying for their cars, people not paying for their mortgages. Their revenue is down. They're not collecting as much money. They're losing money. It looks like the unraveling of the economy could have begun as they yank some of these banks offline, and if it does spread to other banks, and we find out that this is a greater problem. Another problem is the stock market now has a competitor. It's called the bond market or CDs, however you like to invest. But fixed income guaranteed by the government, right now you can go get really close to 5% on a CD. This is taking a lot of people, just regular investors, older people are investors. They had to be in the stock market. It was the only game in town. It's no longer the only game in town. And for that reason alone, this thing here should crash until interest rates collapse back down to zero again, should they ever take them there again. But just the fact that there's a competitor out there where you can put your money and get 5% on it and still sleep at night, they're saying that's going to erase 10% right off the Dow. Whether this is true or not, I have no idea. But there's a lot of media out there, and it makes a lot of sense to me. Why would you want to roll the dice every day with your retirement funds? A lot of these people have been doing this. If you're 50 years old and over, maybe 60 years old and over, you probably should get out of the Dow. You might just find your golden years and your retirement wrecked. And they are. They're moving out, they're moving up, they're moving on. And they're saying on some channels, and even Bloomberg and CNBC have joined in the chant today, well, why the hell is this thing holding on right now? If a bad CPI report comes out on Tuesday, is it going to continue to hold on? I'd say no. I'd say it's we're going to go down for a while here. We have new competition. We have a banking crisis. We have a hot jobs number. It's not as hot as expected. Actually, it's hotter than expected, but not as hot as last month or not as hot as January. We have multiple reasons to not like this. It's bouncing around between, say, negative 10 and negative 150 so far today. It's been bouncing around. That's after down negative 700 or negative 600 for yesterday. So yeah, the Dow's going to move, and people are still jockeying in a position for Tuesday. I'm sure there's still a few bulls out there that think all this is going to come to pass. I had an observation this morning. I'd like to learn more about it, but uh, for 10 years, banks were loaning homeowners money to buy their homes. They were loaning them, $500,000, $300,000, $1 million. They're giving them fixed income rates of 3 to 4%. My question is, maybe some of you can help me answer it below. When they get their money from the Fed to loan this money to the customer to buy their house, are they on a fixed rate themselves, or are they on a variable rate themselves? It would seem like if they were on a variable rate themselves, I don't think the Fed gives fixed 30-year loans. I know they don't give them to humans. Maybe they give them to banks. Why in the world would they do that? I have no idea. That's an awful long fixed loan. It would end up costing the government a fortune in the future, possibly. But if the banks are on a variable system and the banks gave out loans too cheap, this could be a new reason for the banks to be having a new problem, which we haven't seen. Never have we seen interest rates this high without a crash. So expect a crash. There's one coming just from the interest rates alone. Not the fact that they're high, not the fact that it makes a house unaffordable, but for the fact that there's a competitor to Wall Street. There's a competitor where capital can move and be safe and earn a positive rate of return that's favorable, enough to bring in good monthly household income for retirees. Probably a good nest egg to put your stuff even when you're young for a couple of years to avoid turbulent times like this. Unless you want to weather the storm, it's up to you. But it looks like this thing is going down based on all of that news. Can you see it going in another direction? Can this thing go up with all that news? I don't know. The bulls are pretty darn powerful. And if they get some good information that inflation's ending, they might still think the rates are coming down by the end of the year. But my sense tells me that interest rates are going to stay high throughout the year and probably throughout next year. They're not taking them back down to zero anytime soon. The services gap is still too huge until it's closed. The employment gap, this problem isn't going away. It's going to still hover around the shit zone. And as long as it hovers around the shit zone, they can't bring rates down. Until they bring rates down, it's not going to return liquidity back to the stock market. So for that reason and that reason alone, I would get out. We might have a banking crisis that might just make everybody want to get out faster. We might have a CPI report that makes everybody want to get out faster. But the competitor is the big one. Why deal with this? You don't have to. You don't have to put up with a market that keeps you up at night. This isn't necessarily what investing should be all about for all people. Some people like to sweat it and some people don't. And now at least those people have a choice. They did not have a choice before. If you had $1 million, you were going to get 0% interest from the bank or have to pay them some interest to take your money. That's where we were at last year. Now you can get 5% all over town, and you can go to treasurydirect.gov and get 5, or even for you can get an I bond right now for 6.89%. That goes on inflation, and they lock that in for at least 6 months, and you can continue to renew it. 4-month treasuries are going for over 4%, 4.5%, close to 5% now. So too much competition for the Dow. It's like a Burger King opening next to a McDonald's. All of a sudden, everybody has some choices, and these are not good things. Anyhow, I would get short on some of your positions, maybe close out a few things. The future looks like a very dangerous road. Will we get a pop in the meantime? I don't know. We might. The next 2 or 3 months, though, one analyst called for it within 30 to 90 days. Most likely within 60 days, he said a 10 to a 30% crash for the Dow. So we're talking about it losing 10,000 points in 60 days, if that analyst is correct. And he's only basing it off people having options. So keep in mind of that new theory, people having options, people losing interest in not having to do this anymore, because they really don't. Thank you for checking out my channel. Please subscribe and like the video. I will keep them coming for you. Thank you so much. Good luck in the markets. Have a wonderful day.